Welcome to the deep dive. Today we're cutting through some of the noise around gold IRAs.
And specifically looking at Augusta Precious Metals.
Exactly. We're tackling that big research summary you sent over, and our mission, as always, is pretty simple. We want to distill this down to the most critical, need-to-know information for you, the savvy learner.
Get you up to speed fast.
Okay, so let's just unpack this right away. In this whole precious metals sector, which, gets a lot of scrutiny over reputation,
A lot of scrutiny.
one fact from the sources just immediately stands out. Augusta Precious Metals, founded back in 2012, has zero complaints.
And that's zero at both the Better Business Bureau and the Business Consumer Alliance. Ever.
Since its inception?
Yeah.
That's kind of wild.
It's statistically very unusual in this business. And what's fascinating is how that's, backed up by third-party ratings. We're talking maximum scores, an A+ from the BBB, AAA from the BCA. So understanding the why behind that record is, I think, key for any investor.
Right, so that's what we're doing today. A full analysis of their model, the mission, who it's for, their educational approach, and then, the nuts and bolts, the fees and compliance.
Exactly. And it all starts with that foundation. The company was started in 2012 by its CEO, Isaac Nuriani. And the motivation, according to the research, came from seeing this information gap.
An information gap.
Yeah, basically that American consumers weren't getting the full picture on the economy or on investment alternatives.
Because their traditional financial advisors often just don't sell precious metals.
Precisely. So the core mission became about education, helping retirement savers diversify through gold and silver, but doing it with total transparency.
And Nuriani has the background for it, right? An honors degree in economics from UCLA.
He does. And that commitment to ethics leads us right to the first major filter for their customers.
The barrier to entry.
The barrier to entry. The research is very clear on this. There is a $50,000 minimum investment.
Wow. Okay, $50,000. That's a high bar.
It is. And the source actually called it a shame because it does exclude some people.
But strategically, what does that do? Who is this company actually for?
It clearly defines their market. This is for higher net worth investors, people who have already built up substantial retirement savings.
So by setting that gate, they can focus their resources.
Exactly. They're built for specialized high-touch support, not high volume, mass market sales. So that $50,000 number is really the first thing you need to weigh.
Okay, so if you meet that minimum, how does the company deliver on that promise of what the source is called robust education?
This is where it gets really interesting, and it seems to be the centerpiece of their whole model. It's all driven by their director of education, Devlin Steele.
And Steele is not just some title. The sources were clear. He's an on-staff, Harvard-trained economist.
Right. And his background is, well, it's pretty compelling. 3 decades in finance, he's processed over $2 billion in assets.
And this is the big one. He's noted for predicting the 2008 financial crisis.
And the gold and silver boom that followed.
That's a powerful credential in this space, isn't it?
It's huge. I mean, if you're nervous about the traditional system, the guy guiding your education is someone who saw the last big collapse coming.
It creates a lot of trust.
So how does he deliver this education? What does it actually look like?
The crowning jewel, as the review called it, is this free one-on-one educational web conference.
And Steele designs and conducts that himself.
He does.
But, I have to push back a little here. Is one conference, even one-on-one, really enough to educate someone new to this?
That's a great question.
Or is it, just a very high-touch sales pitch?
And the research suggests it's more of a gateway. The goal is to make sure you're fully informed on the risks and rewards before any money changes hands. It's tied to their whole philosophy of specialization. They only do precious metals, IRAs, and cash accounts. They haven't watered down their expertise.
Which means the entire team, from sales to processing, are experts. Right. And that leads to efficiency. That IRA processing department, for example, handles 95% of all the paperwork for the customer.
95%. That's a huge stress reliever for someone rolling over a 401k. All that complex IRS paperwork.
It is. It removes the anxiety and it minimizes customer error, which, probably feeds right back into that zero complaint record.
Okay, that makes perfect sense. And that seamless process, it leads us right into trust and market recognition. We've hit on the zero complaints since 2012, but how do they actually do it? What's happening behind the scenes to prevent problems?
It's about proactive compliance.
Hmm.
They have a robust internal compliance department, they use outside counsel, and they voluntarily submit to regular independent audits.
So they're not just waiting for problems to happen, they're actively hunting for them.
Exactly. They state they go further than the law to fulfill its spirit of protection. That's what gives the zero complaint streak its real weight.
And the external awards seem to back that up.
They do. Consistently. Money Magazine's best overall gold IRA company for 3 years straight, 2023, 24, and 25.
And maybe more importantly, most transparent pricing from Investopedia.
That transparency award is key. That's usually where companies in this space get into trouble. Hidden fees, confusing price structures.
Right. And the customer reviews are just consistently high across the board. Google, Consumer Affairs, TrustLink. It's all 4.8, 4.9, 5 stars.
That kind of consistency over hundreds of reviews, it points to a very successful, repeatable process.
But even so, the research did find a tiny amount of negative feedback, about a 2% ratio.
Yeah.
So what were those few people complaining about?
It was almost always one of two things: the bid-ask spread, or very rarely, a delivery delay.
Okay, let's break down the bid-ask spread. That's just the dealer's profit margin, right? The difference between what they buy it for and what they sell it for.
Exactly. And it's how every dealer makes their profit. The feedback wasn't about a hidden fee. It was just, some customers not fully anticipating that margin.
And how did the company handle it?
In every case, the research found, a representative replied, explained it transparently, and the customer was satisfied.
So good communication de-escalated the issue before it became a formal complaint.
It seems so, which is just smart operational risk management.
Okay, let's shift from the service model to the actual mechanics. For someone new to this, what exactly is a gold IRA?
It's a type of self-directed IRA. It lets you hold physical, IRS-approved precious metals in your retirement account, just like you'd hold stocks.
And you can fund it by rolling over an existing account, like a 401k or a traditional IRA.
Yes, you can transfer those funds over without triggering any taxes or penalties as long as it's done correctly.
But we have to stress, the IRS rules still apply. This isn't the Wild West.
Oh, absolutely not. Rule 1, the metals have to be stored at an approved depository. You can't just keep them at home.
Rule 2,
Only specific high-purity IRA-eligible coins and bars are allowed. No collectibles, no jewelry.
and Rule 3, all the standard IRA rules still apply, like required minimum distributions RMDs, which kick in at age 73.
Right, and Augusta helps you manage that whole process.
Okay, good. Now let's get granular on the fees.
Right.
The research made a big deal about them being flat fees, not scaled.
It's a critical distinction. Okay, so the costs are a $50 setup fee plus $30 for the wire.
A one-time thing.
Right. Then annually, it's $80 for administration, and for storage, it's $150 for segregated storage.
Where your metals are kept separate.
Or $100 for non-segregated, where they're pooled.
So let's unpack that flat versus scaled fee advantage. Why is that such a big deal for a retirement account?
Well, think about it. A scaled fee might be, say, 0.5% of your account value.
Okay.
On a $50,000 account, that's $250. But what happens when your account grows to $500,000 over the years?
Oh, wow. Now that 0.5% fee is $2,500 every year.
Every single year. Meanwhile, Augusta's flat fees, that $80 plus storage, stay the same. The savings compound over time.
That's a huge difference.
And on top of that, they have an incentive where they offer to cover up to 10 years of those fees for qualifying customers.
So for many clients, the annual cost could be zero for a decade.
For a full decade.
The research also mentioned account lifetime support. What does that mean in practice?
It means they don't just disappear after the sale. They're your partner for the life of the account. They help with disbursements, RMDs, and importantly, the buyback process when you're ready to sell.
And that buyback comes with a highest buyback guarantee. Why does that matter?
It provides certainty at the exit. Because that bid-ask spread exists, a guarantee ensures you're getting the best price the company can offer when you liquidate. It removes the guesswork.
Got it. And for security, let's circle back to storage. What does fully allocated mean and why is it so important?
This is the gold standard for security. It means your metals are legally held in your name. They are not, and this is critical, they are not on the depository's balance sheet.
So if the storage company itself went bankrupt,
your assets are completely protected. Their creditors have no legal claim to your metals whatsoever. It's the difference between owning an asset outright and just having a claim on an asset.
that is the ultimate peace of mind. Okay, so to wrap up this deep dive, the research paints a pretty clear picture.
It really does. This service is strongly geared toward two groups. First, People new to alternative assets who needed that robust, personalized education.
And second, higher net worth investors who already know the space but want that lifetime support and compliance assurance.
Both defined by that $50,000 minimum.
And the key takeaway seems to be that transparency isn't just a buzzword for them. It's built into the model. Zero complaints, independent audits, and that favorable flat fee structure.
Absolutely. We've talked about how gold and silver are seen as a hedge, a way to add stability and diversification to a retirement portfolio. And given that focus on protection, the research mentions something the CEO, Isaac Nuriani, says. He refers to gold and silver not as an investment, but as your financial insurance.
Financial insurance.
Yeah. And that phrase, it's a really compelling way to frame it, isn't it? Especially when you consider the economic outlook from experts like Devlin Steele. It shifts the mindset from just chasing growth to prioritizing security. And that's definitely something worth mulling over.